Hi, I'm Ken, and I'm here to talk to you today about something everybody has been thinking about. Maybe not. We're going to talk about mortgage rates. Okay, so mortgage rates are kind of boring. Let's be honest. I mean, they really are something of significance when it comes to, buying and selling property. But on the day-to-day, you don't really think about mortgage rates. Well, you should. The feds have raised interest rates over the last year, basically since last July, a little bit longer than a year. They've raised them now 4 times. And we're sitting at 1.75%, and that is from the feds, which lend money to the 5 big banks. There apparently is going to be 3 more rate hikes or increases, probably a quarter basis point, 0.25%, over the next year, end of 2019. So, what does this mean for you? If you're going to buy from now until the end of 2019, so basically over the next year, you should go and talk to A, myself, and B, a mortgage broker, who I can recommend a couple to go and talk to, and figure out your game plan. Honestly, the strategy that you're going to implement, the game plan that you are going to follow is extremely important, especially over the next year. Probably none more important than this year coming. So if you basically, I want to break these numbers down for you because quite honestly, if you don't know the numbers, you don't know what's going on. It can be very confusing. So say you buy a $500,000 property. You put $100,000 down and you have a mortgage of $400,000. Now, I'm not going to talk about CMHC or any of those other fees, depending on whether you put down 20% or not. I just want to talk mortgage numbers. Today's rate, yesterday's rate before the rate hike to today, what you'd pay, your increased monthly payment is about $50 on a variable mortgage. If it goes up another full percent, so from 1.75 to 2.75, and that is speculation, there's no guarantee on that, you could be paying an extra $200 a month on your mortgage payment. So it's fairly significant. That could add, approximately $2,500 a year to your bottom line. Right now, you're going to add approximately $600 to your bottom line. Now, that is if you are in a variable mortgage. If you're in a fixed mortgage, the rates go up and down, it doesn't really matter. But if your mortgage is coming up for renewal, or you're planning on selling and getting a new mortgage, these are things you really have to take into consideration. So, if you're thinking about buying, or thinking about making a move over the next year, come and talk to me, and we can sit down and devise a game plan that strategically helps you find what you're looking for, whether you're purchasing or if you're going to sell and move. We need to map that out. And number 2, I can recommend a couple of amazing mortgage brokers that can run the numbers with you and let you know exactly what you can afford and what your monthly payments are going to be based on your financial situation. So that is today's update in terms of real estate. Listen, the fall market is upon us. If you're thinking about buying and selling, it's a great time to do both. We do have some significant inventory, some great houses to take a look at, and if you're purchasing, it's really a great time. If you're selling your home, it's an even better time because there's a great pool of buyers out there. The rates are still very affordable, but as they get more expensive, that buyer pool is going to shrink. So now is the time to get on the market if you're going to do that. Contact me and we can set up a game plan. I'd love to come take a look at your house. And we aren't just going to list it and just going to throw it up on MLS. We have a whole process when it comes to social media marketing and exposure to make sure we get the right buyer into your property. I am Ken Keller-Williams, Burlington. Check me out online, www.kenparkin.com. Leave a comment if you have any questions. I'd love to chat. And I'll see you in the next video.